Hey traders and investors, checking in on the stock market today, turnaround Tuesday where the bulls had complete control after a very weak close last Friday. We'll see what the bulls need to do on the charts to maintain that control for the rest of the week.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
All right, so checking in, how did we start the day is what I want to go over first. The S&P 500 futures chart, we were watching the hourly, and the bounce was significant, taking place during the holiday. And I was watching the hourly EMA 12 to end last week, and the bulls just blew right through it, slow and steady, strong recovery. So we started this morning with a very clear, tight range. And this is the range that we were trading within all pre-market, and then the bell rang. Look at this rejection from resistance first thing, and then a drop down through support. That gave the bears the short-term advantage out of the gate. But we knew from there, on the bear break, just zoom out because we have tons of space to be looking for a 4-hour high or low, and a 4-hour high or low is the most likely scenario. As soon as the bear break took place, I'm watching the three major sectors, and I'm watching that XLV is up at the high of the day, and it's XLF and QQQ at their lows, pulling SPY down, and I know that if XLV is going to stay at its high of the day, that the broader market bears are not going to get followed through because they have to see all of those three major sectors weak at the same time for bear follow through. So on the 5-minute time frame, we were ending up just bouncing around range bound, low of the day bear break, saw very little follow through. And then the momentum shifted when the QQQ bulls showed back up. So on the daily chart now, we have a little lower high and lower low. There is no bear follow through on that lower low. And we're now looking at resistance of 381.13 and 381.49, the all-time high. If we reject from the all-time high, it's then up to the bulls to try and change the daily trend back in their favor by holding the low of Friday at 373.70, 373.70, and then trying to change the hourly trend from there. Weekly time frame, inside bar last week, and currently an inside bar this week. So tightening up, still sideways, and the low of Friday now is going to be a short-term line in the sand level for a lot of individual names because of how distinct the shift was from that low of Friday into the action today. And it'll stand out very clearly on some names. And SPY is a good example of that. IWM wasn't seeing much weakness at the end of last week. Daily bull flag attempt, all-time high right here, 215, only resistance level nearby. And even if we were to break the low of Friday here, no major red flag whatsoever, the IWM bulls are keeping their complete control. QQQ is the majority of the reason for the weakness to end last week. Confirmed daily downtrend, zero follow through. Now we're looking at resistance, 317.53, and then the all-time high, 319.93. Again, a complete 180 turnaround from the day Friday to the day today. Weekly time frame, inside bar last week, currently still an inside bar this week. Healthcare. Bull flag on the daily, confirming with a new all-time high. Lack of follow-through on that all-time high, but it was a bull break. Our line in the sand level is now 115.83 support to keep the bulls in complete control, and there are no red flags on this daily chart at this point. Financial sector working its way through earnings reactions. So an inside bar compared to Friday, and this could still roll over. Look at the 4-hour chart. It's not very visible there, but I was just watching this little head and shoulders. This would be the left shoulder, the head. Our neckline support is at 30.49 and 30.71. So if we were to fail to break the all-time high and then take out those daily high or lows, we would zoom out for weekly consolidation to begin. So that's something to be keeping an eye on in the short term. The bulls have not proven a shift in momentum in their favor yet from these earnings reactions. If the inside bar breaks bullish, 31.18, then we will have a new daily high or low, and the bulls will have shifted that momentum back in their favor. One more note I forgot, Netflix had earnings today. and it's bullish. All-time highs are in play. 567. So 575, $8 away all-time high. And with that, after hours, we are seeing some bullish reaction in QQQ. We're at 317.47, so up about $1 from where we closed. So just another point in favor for the bulls as far as that reaction. Where are we? Biotech sector. So this was a cup and handle that confirmed all-time high resistance. There's your cup. There's your inability to break the all-time high. There's your bull flag. And there's your break. Not a ton of follow-through, but the bulls are still marching with the higher low every day. Inside bar today, if it breaks bullish, we're right there on the all-time high. And after 155.83, obviously a lack of resistance in blue sky. So healthcare sector, biotech sector, both showing us some solid strength today. And anything above 145.75 on XBI will be a daily higher low, keeping those bulls in control. Semiconductors, daily higher low Friday, 232.71. Right back in full control, up at the all-time high, 242.87. We broke the all-time high. Need follow through tomorrow, but again, extremely strong sector at this point. Solar, look at that turnaround. As bearish a day as you can have Friday, like it never even happened today. Closing at the high, erasing all of the majority of the drop on Friday. And the bulls are hoping that this is it's not even weekly consolidation. We're still in a pattern of a higher low every week. So inside bar still. Resistance I'm looking at, I care about this high of 117.72 before 123.66 as the most important level. If we were to reject from 117.72, it would be possible to see a 4-hour tightening range form. Wouldn't be surprised if that happened. But again, very notable bounce recovery at this point. U.S. marijuana stocks, the ETF here, MSOS, very healthy, potential daily bull flag coming off the all-time high. It too was an inside bar today. I started scaling back into some entries. So made an entry today. I'll make another entry at the daily EMA 12 or hourly oversold if we get there on either. As long as the broader market is healthy, we're going to be looking at our strongest sectors, whether it's electric vehicles or battery, pretty much everything that's in the subsectors for electric vehicles, solar, marijuana stocks. All of these names that have been showing strength for the last few weeks, bulls are going to be looking to buy these dips if there's not broader market fear. The VIX, bull break on the daily with absolutely no follow through. Now we're looking back down at 2170. And again, just a bit choppy and definitely range bound at this point. So the dollar has a lot to do with this. The dollar changed the daily trend, and we're not getting much follow through at this point. That being said, we can still see follow through, so we're going to keep a close eye on it. Anything above 89.92 is a daily higher low. If we lose the daily uptrend of higher lows, our weekly lower high has been set. We've got weekly EMA 12 resistance. If we get over weekly EMA 12, we start creating the space for the potential of a weekly trend change. If we stay under that level, it's a potential weekly bear flag. If I were a dollar bull in a bullish position, I would not be comfortable that we confirmed a daily trend change finally straight into consolidation. So keeping a close eye on the dollar the next 2 days. A red day tomorrow would be a great sign for asset bulls. A green day tomorrow, and we still have to be cautious as asset bulls because it is still a daily uptrend and it can definitely see another higher high. Metals trying to recover. Daily bear flags confirmed with no follow through. And the most important resistance now is the high of the initial bounce. Anything under 1864 on gold is just a lower high. We'll have to see a daily trend change to shift momentum. And we're just looking for a weekly higher low here. I'm pretty much, for simplicity's sake, just viewing this as an attempted weekly trend change. Looking for that higher low. Silver is a healthier looking weekly chart. Same thing. High of the bounce at 25.90 is the most important resistance. Daily trend change is needed. But after a massive move of 25% plus, we do need a weekly trend change. And that's what the bulls are hoping to shape up. If the dollar were a weekly bear flag, that would be the potential for the scenario for these metals to set these weekly higher lows. Miners still weak. daily inside bar today. So again, not going to expect much out of minor bulls as long as the metals are still in daily downtrends. That's going to have to change. Switching over the oils futures contract to CLH 2021, March 2021. That's where the volume has rolled over to. It's a daily bull flag as well. Just looking at the high of 53.94. No red flags on that daily chart. Natural gas, pretty notable pullback, so we lost the daily higher lows, which means zoom out because weekly consolidation is now underway and we're scouting a weekly higher low compared to 226. Bulls will need to change the weekly trend in their favor to have confidence that monthly higher low is being set. And at this point in time, we are about 35 cents below resistance and about 30 cents above support, a little bit less. So roughly in the middle of this range. Bulls need to set that higher low soon to have a chance at that trend change. If we keep pulling back, we're either going to be looking at a bear break or a weekly equilibrium. Trades today. Today was all about falling wedges. Today was a day where I wasn't necessarily aggressively trading, but I was in the zone and just in terms of feeling really aligned with all the setups and watching them follow through and just having my time frames aligned, essentially. So I've been focusing on cryptocurrency more over the last month or so because of the opportunity there. And I'm going to continue doing so as long as there is that volatile opportunity. But we started the morning and who was first? DDD. So I was ending the live stream this morning and I saw this pullback on DDD from the high after a bull break. Very strong move to start the morning. Big pullback. So the most likely scenario, unless there's increasing bear volume, is to be scouting a 5-minute higher low compared to the low of the day. So I saw this pattern here. I said, okay, we're looking for that higher low. We're seeing a little bit of bear breaks. We're not getting any follow through. What does that mean? Find the falling wedge. So I zoom in and I look for the 1-minute falling wedge. And I found it. I said, okay, I'm looking for the longer term time frame most likely scenario, 5-minute higher low. I see a pattern I recognize, a falling wedge. And I see a very low risk trade setup. I make an entry at 30, I think it was 30.65 by the time I got my entry. And I put my stop under 30.19. I gave wiggle room. Bull break, nice follow through, but I was out by the time we hit the high of that bounce and just exited for a solid little half-day maker. From there, NIO did the same thing. What is the most likely scenario on the hourly time frame for NIO coming off of Friday's move? Well, I'll tell you. We've got low of Friday at 55.67, high of the morning 59, big bull move up, then consolidation. Anything above 55.67 is an hourly higher low. I'm looking for that hourly higher low. Okay, what do we need for an hourly higher low to be set? A 5-minute trend change, I know that much. But I started to see some bear breaks without much follow through. Put on my wedge goggles. Looking for an hourly higher low. This was what I drew. I said, that looks like a falling wedge. So I entered on this 2-minute higher low. I put my stop under 56.41 with wiggle room. Sold half into this resistance in case we rejected and kept pulling back. And now I'm still in half and I decided to swing trade it. Decided to swing trade it because it's a healthy daily consolidation off of daily EMA 12. Last time I tried for a swing trade on NIO, it was this day and I stopped out, obviously, leaving some money on the table. So I'm going to give it another attempt here. I'm very comfortable with my position. And if we see a bull break of 59 tomorrow, daily higher low is set, and I will be even more comfortable in that position. Aside from that, marijuana stocks are still absolutely on fire as far as the dip buying that we saw today. Bull flags galore. So there's still opportunity there as we're watching for continued volatility. Again, from the high of $22.61, pullback of $5, which is 20%, into a bounce of almost another 20%. Just beautiful volatility in the MJ sector. And then you got your individual names, whether it's DDD or GME or AMC. Penny stock, wasn't really caring much about AMC today personally. ZM, we're scouting a daily high or low. There's just so many plays out there. And if you're a day trader, just find the volatile ones and find patterns that you are comfortable with or that are your edge. DDD gave us a beauty of a 15-minute equilibrium all morning. It eventually broke bullish. We didn't get a ton of follow through, but to find that higher low was a great entry opportunity. And the lower high, I shorted DDD as well. I forgot about that. Shorted DDD over 32. 2-minute time frame was extended. Knew the 15-minute lower high is the most likely scenario. 2-minute time frame went straight from 30.69 to 32. So I shorted it over 32 and covered it on this little pullback. I hope you're well. Do good things out there. That's all I got.